Good afternoon. Good afternoon, Roberto. Right, you're probably thinking, why am I on TradingView at the moment? My MetaTrader has some reason decided to play up literally last second. So I actually don't know what's going on with that. So I'm gonna have to stick on TradingView today. Hi Justin. Good, thank you. How are you? I can turn these off actually. Now these charts aren't as up to date as my MetaTrader chart, so you'll have to sort of bear with me when it comes to the analysis. There might be a lot of old analysis on here, but at least we can break down the charts together, I guess, using this. So yeah. I did make the prices bigger on the side as well, so hopefully that's large enough. I can make it a little bit bigger. This is the one thing I do like about TradingView, is that we can make the prices bigger. We've got the watermark in the background, so you can see what we're on. So yeah. Good afternoon, Vincent. I'm doing really well, thank you. How are you? What other data do we need? We need a little bit of data, don't we? What we'll do is I'll open the tab up here. We'll get some of the data up. No real data on the board today, on the slate today, but got quite a bit of data coming up in the week. We did get a little bit of data overnight as well, with regards to CPI out of Japan. So that was quite interesting, considering what's going on with the Japanese yen at the moment, which we'll go over in a second. I guess I don't need this anymore then. We'll close that down. So guys, let me know what you're up to. Let me know what you're trading this week. It might be a little bit of a tricky trading week, considering we've got so much high impact data coming up today. Not today, this week. It's going to be a little bit of a tricky week in terms of direction. We may get a sort of consolidative week. We're not really seeing that so far. I've actually seen quite a bit of decent movement going on for the past couple of days. Whether that continues, that's going to be what's the sort of question we're going to be asking ourselves. Considering, like, you know, we have Jackson Hole coming up. We have we've had some data out of China. There's some potential for China to cut rates further. They've only cut rates to their 1 year prime loan rate. The market was expecting the 5 year to be cut. That didn't occur in the end. So yeah, we'll wait and see what happens. But yeah, we've also got the consideration from the Bank of Japan. You know, we're above those intervention levels. We've had some core CPI data come out in Japan at 3.3%, above the expected fall of to 2.9%. So that would have put a little bit of pressure on the Bank of Japan. There are some murmurs to suggest that the central bank gonna keep to this dovish tone. So yeah, there's lots of dynamics going on in the market at this current moment in time. So it's going to be interesting to see, you know, where the market pans out and plays out this week. Starting on the dollar index then. Hello, Sajid. Welcome. Euro US dollar heading for July monthly low. Yeah, potentially. There's I do quite like euro shorts. I am euro short at this current moment in time, so I'll go through that in a little bit. But yeah, let's kick it off with the US dollar index. Let me just take some of the analysis off here. I have got a couple of trend lines on there. I will just let me change the color of those, because I'm just looking at the screen and they're a little bit light. So I want you to be able to see these. Let's go with that. And then we can change this one as well. So hopefully you can see those lines a little bit better. We are at an area of resistance. You know, if I zoom right in here on TradingView, you can see we've come off this high in here, traveled through this one. We'll just try and make them a little bit more accurate. And we are coming into that area, which is around about the 103 sort of 50s is where we're kind of at the moment in time. Now, when we did the video on the week ahead analysis, we discussed the fact that the 103.50 has been a decent level of resistance, which is this level just through here. If I just put the coordinates on 103.50, and we did get some kind of reaction. We've also had obviously the market working within this kind of channel just through here. Let me just actually put the ray on this. So let's go to settings, style, should be able to extend right line. Okay, that's the wrong way. Extend left line. So yeah, you can see that prices come through. We're in this kind of nice trend line support running through here as well. Dollar very much a bullish market. Now, we've been kind of discussing the risk on, risk off tone. You know, if the risk tone does move towards that more risk off sentiment, then the US dollar could benefit from the back of that, and we could see a break above this key area, which was the 103 spot 50. And you can see we're trading at 103.57 now. We're breaking through that level. The past couple of days kind of give us a little bit of an insight to what the market participants were looking at. If you actually see here, the past kind of 2 days or 3 days, Friday's candle, Thursday, Friday, Monday, and they were all just kind of settling below the 103 spot 50. But what it wasn't doing is creating lots of selling pressure. You can see by the sort of length of the candles. If I zoom right in here, you can see by the length of the candlesticks compared to sort of the previous range, they're very shallow in range. They're kind of rejecting that key level. Now, what that tells me essentially is that there is a lack of momentum to the downside. There's a lack of selling pressure coming in here. Now, today we obviously had that selling pressure early in the European session. In the European session, if we just have a quick look on the hourly chart, you can see we were pretty bearish, right? So over in the Asia session through to the European session, was quite bearish. It then did turn around about 9 a.m. So then we did start to see that European session obviously start to turn as the US started to come in. But once the US came in, really we've been very, very bullish here to the upside. So it looks to me like we're obviously going to see that continuation of this sort of dollar bullishness at the moment. We do have a little bit of data coming out. We've got some existing home sales and whatnot coming out in about 20 minutes. And we also have some crude oil stock coming up as well. But that probably won't affect the market considering what we've got coming up this week. But yeah, dollar very, very bullish here at the moment. If we were to start trading above this high in here at the 103.70s, I think it would open the door up to a move up to that 104 spot 50 handle, which were these highs that formed back in May. So going on to sort of euro US dollar, which Roberta was talking about, you can see we're kind of finding that downside pressure now. Sort of let me just take a little bit of this old analysis off here, and we can add some new stuff. So you can see price. Let me just connect these two highs up. Price very much sort of bearish, again, in line with, if you look at the weekly chart, we've just been forming these bearish candlesticks. Now, this was a level of interest we were talking about, and we were discussing whether price would actually find some support in around this level. Sorry, let me just zoom in. I can see that there. We were talking about whether price would find some support, because basically what we were looking at, I'll just bring volume profile on, considering we are, oh, that's the wrong one. Considering we're on TradingView, I might as well show you. So it's just zone just through here. So what I did is I took the fixed range tool from the low to the swing high. I'm looking for that area where the market does high volume. Now you can actually see here we did get a retest of it, and it was on it was basically towards the end of July, and price did rally from that point, but then we couldn't get back above the value area high of that level. Price stayed within. Now typically what that suggests to me is that price is going to sort of trade within this zone potentially, and that we could come down and see the low of the range, which basically is the value area low. So market's just pushing through here at the moment, obviously being helped by a little bit of that risk off sentiment in the market with the dollar gaining that strength. So yeah, I think euro dollar is a little bit more of a play to the downside as long as the dollar index continues to sort of break out. Now I did look for an opportunity on this. I will show you that. So if you just go into an hourly time frame, why am I currently short this market? Well, it's because I got a swing trading setup, and the swing trading setup for me is the 50 and the 200 moving average crossing over with the RSI indicator. Okay, and you can see that we got that. I did go in it a little bit earlier, which was the 30-minute candlestick. Although we didn't technically have the setup here on the 30-minute, I liked the way the hourly was going. We traded through this trend line support as well, which is a nice idea that it's kind of potentially breaking out of that. So yeah, ended up taking a position on this at the moment, just shy of a 1-to-1 at the minute. It's about 0.9. 1-to-1 comes in right at these lows in here. So I need price to sort of continue down at the moment and potentially break through these lows. Now we may get a reaction at the low, which wouldn't be surprising to me. I wouldn't be expecting some kind of reaction there. But now we're kind of breaking down. We could also see potentially price coming down into the next level, which could be that 1.0 sort of 7 area just through here. Okay. So yeah, lots of dollar pressure at the moment. It's pushing euro to the downside. Euro very much a weak currency coming into this week as well. Obviously, you can see that weakness coming through there. What really was important was that price didn't find support here. Okay, the fact that it didn't find support, although it did. What we did discuss was the fact that we had this consolidation pattern and we had this fake out to the upside. That fake out there, which then produced the breakdown, was something that was fairly negative for price. So yeah, we're broken down there now. Euro dollar looking to continue to the downside here. A market that's been sort of really fruitful, if you were looking to get on the back of that, was New Zealand US dollar. And you can see here, I've got lots of sort of markups here at the moment because I've been looking for this Kiwi bearish play for some time. Now, we initially got the sort of weekly chart forming a reversal pattern after price came back up into the 63.75. That was back in the middle of July, and then ever since then price has been breaking down. We've also discussed a couple of different things with Kiwi, the fact that we broke out of this area as well. I need to change this because I was right the first time, I think. Yeah, extend right. Now that we've broken down through this trend line support as well, you can see the heavy selling pressure coming in here. We did get a little bit of turnaround on this morning. So, I mean, it's probably looking good for a potential short opportunity at the moment. We did come up into the 200 moving average here, and you can see on the hourly that we've rejected that. And we are starting to see some selling pressure here now. From a signal point of view with this particular strategy, it is starting to set up. I mean, if we did get a close like that in 15 minutes, that would be, a technical thing for me to see a signal develop from a strategy point of view. Obviously, like I said last week, that doesn't mean you just go and take a position in the market. You do your own analysis, you understand. You can see this one here, for instance, these ones down through here, you probably wouldn't take because of the risk reward ratio down to the lows there. But you can see how this strategy, could work. We have discussed this before in the past, but these are all the technical signals here. All these little arrows there are all the technical signals that form from that strategy. Obviously, then, as long as the conditions are met, we can look to take advantage of that. But Kiwi dollar there, really nice market. I do quite like the idea of being short this. Whether that continues and follows through into this week, we have it's a little bit of one of those weeks where the risk off and risk on tone could swing back and forth quite aggressively. So you've got to be a little bit aware of that. So you may want to stay away from too many risk assets. You may want to focus on just one or two. Dollar yen though, the big market that we're looking at. Actually, Vincent, to be fair, has come up and said I'm short from 0.5955. So let's go and have a quick look at that. Sorry, Vincent, I didn't see your message there for a second. So 5955. Yeah, beautiful entry. Almost just below this low in here, which was, I hope you don't mind me putting this on here. I can change this kind of, yeah, entry price 59552. Don't know why that's not letting me change that. There we go, 59552. Yeah, that's a great entry. A nice rejection of the 200 moving average there. We could be looking to hold out down into the swing lows here. If price obviously does continue to break down and end up back down towards these levels down through here, which would be nice. The 0.59 handle, I would like to see that happen, because that means that dollar momentum is continuing as well. But yeah, let's go to dollar yen. We do also have another signal being produced by the strategy, which was here. On the 30-minute, it became a little bit earlier. A little bit later, actually, than the hourly, considering where price has been. But US dollar yen, really interesting market to me. We've been breaking through these kind of key levels of support and resistance for some time. The last kind of one was that back down through here. We kind of looked at the 138.50, which was, let me just put the coordinates in, 138.50. That was our kind of key supporting point. We did have some kind of trend line support as well going on. A couple of trend line supports, one down through here, the other from that point into this low. But yeah, the 138.50 was the area of interest. We've then continued that sort of bullish weekly trend. We're above the 145 handle now. Actually, if I put 145 in, I'm going to make this a different color as well. The reason why I'm going to make that red is because that was the sort of intervention level that the Bank of Japan were discussing. We did get that kind of initial reaction from it, but price is above it now. So it kind of begs the question, where could dollar yen continue to go to? Now, we've been kind of looking at this sort of zone up through here, especially on a daily time frame, because you can see that price came up into this level, which was around about the 150 spot 15. We then had, the high was around about 152 before the intervention really kind of came in. But we could be just waiting to see this week play out before the Bank of Japan does anything with regards to intervention. So we shall see what happens to dollar yen. But I do quite like the fact that we are sort of, above 145. Yesterday's close was a bullish close as well. That to me is something I can tick off my checklist and say, yep, got a bullish close on that market. Let me just check my microphone's on the right setting. Yep, okay. Sorry, I don't know why 20 minutes in I thought I'd check my microphone setting. But yeah, so I quite like this market, to be honest. 4-hour time frame. If we go to the hourly, you can see some kind of technical kind of build up and patterns in here where we have sort of you know, the market sort of trend in here. We then break through and breach multiple trend lines. What I like about this, if I grab the head and shoulders pattern tool, you can see we have the left shoulder, head, and we kind of have like a little right shoulder coming in here. Like that. We've traded outside of that now. We've almost kind of come into that sort of neckline area as well. You got the, let me just zoom in again so you can see that in a little bit more detail. If we go and mark this sort of neckline with a sort of square rectangle instead, you know, we've come back into that level there, and now we're starting to see buyers coming back in. So I think if buyers start to come back in here, where could they end up going? And, you know, we could end up seeing price come all the way back up into sort of these swing highs here at the 146.30. If we were to break above 146.30, then, you know, I really think it opens the door for a move up to the sort of 149s, 150s. So yeah, I do quite like that there. Like I said, we do have a technical setup in here on the hourly. So yeah, we'll see if price can continue to kind of push here and see if we can kind of break through that little area. But technicals are kind of suggesting that we should be bullish here. Strength and weakness also suggesting that, as long as obviously the dollar index, you know, continues to push as well, which is at the moment, which is great. So we'll hopefully see euro continue to the downside. A little bit on cable. I liked cable from a weekly perspective, but because of the fact that the dollar's starting to gain strength, I actually talked about the possibility of cable breaking lower. I think there could still be some potential to that. Let me just zoom out here a little bit. Sorry, there's a couple of questions. Emilio, can we take a look at gold, please? Yeah, we'll go take a look at gold in a second. Vincent, please, do you have an idea about implied volatility range? If yes, can you talk about it for me? Yeah, we'll get onto that. Let me make a note of that. Because we can also kind of talk about sort of volatility in terms of the VIX index as well, which if we actually go take a look at, it's starting to rise, right? We're starting to see that. If we just put that on a line graph, we are starting to bounce on the volatility index as well. Yeah, let's go talk about gold first. Gold also starting to be a little bit bearish here. And this is all stemmed, again, it's all to do with that US dollar index, isn't it? And the fact that we are starting to see that bullishness. So the likes of your commodity currencies, Aussie, Kiwi, you know, we've seen those starting to fall. Euro, pound, also starting to fall. But it's all based on the sort of dollar movement. Same with gold. No difference, really. You can see that gold obviously correlated to the US dollar index, or the US dollar in general. You know, very bearish on the weekly. Okay, very bearish. Now, we talked about, you know, would gold start to sort of find some support back down at the 1890 level, and it hasn't happened because that US dollar has continued. We've broke through this trend line here. We've now broke and breached this trend line as well, and we have breached a longer term trend line, I believe. No, it might have been the one I was just pointing at just through there. But yeah, gold very much starting to feel the pressure here. Now, if I'm looking at it from this weekly point of view, I'm looking and saying to myself, where is the sort of next area where gold could potentially come into? Now, my eyes are pretty much drawn down into this point, which is around about $1,800. That would be a significantly big move to the downside there. Whether we do get some kind of movement there or not, I'm probably looking more at the 1812 area, 1815. Let's the 1815s. Could be a potential for a move down to that point. We have a little look just through there. You look like a scammer. Oh, thank you, Pikachu. Appreciate it. Hey, John, please check out dollar yen, please. Hi, Bongo. Yeah, we just went through dollar yen. I'll go over that in a moment. Do quite like the potential for dollar yen to move to the upside. We were just talking about this inverse head and shoulders pattern that developed on the hourly chart, and that we've traded through areas of resistance, being these trendline resistances, obviously as well the weekly chart, very bullish at the moment, considering with and the risk tone in the market is very much risk on. So yen really suffering at this moment in time. Is it suffering against other currencies? No. You can see Aussie yen here moving lower, CAD yen, Euro yen. So it's not necessarily a yen move here. It's a dollar move. It's a dollar-based move. So dollar's obviously, gaining significant strength here. Let me just see if I've missed anything. I don't think I've missed anything in terms of news on the dollar today. US yields very strong. Let's have a go at the US 10-year then. Yeah, 10 years are breaking 4.3% highs here. I mean, they could go to 5%. They could easily go to 5%, 5.25% even. Yeah, so these government bonds are really helping the US dollar sort of drag higher at the moment. You've kind of got two areas of resistance. So we've kind of got this 4.49 or 4.5. We'll just round that up to 4.5. And then you've got these highs just through here, which is around about the 5.25% mark. So if those government yields continue to drag higher, then the dollar's also going to be like feeling that, isn't it? And it's going to start dragging with it. Which could bring price into those sort of May highs, that 104.50s. Again, like I said, it's more of a dollar-based move rather than a yen-based move at the moment. So if you are looking at sort of dollar-yen, just be aware that, if the risk sentiment does change quite quickly, then, yen can become quite bullish. At the moment, if we look across the board, like I said, Aussie yen on the downside slip here, CAD yen, Euro yen. It's not looking particularly good to be involved with yen at the moment. So I'd be more involved sort of in the US dollar here as price starts to sort of break down. But saying that, from a technical position, we were talking about this inverse head and shoulders and whatnot. So yeah, dollar yen could reach the 146.30. Is it the best sort of idea to trade dollar yen? Yeah, probably not. Just because it looks to me like you're going to trade strong against strong. But do I like dollar yen in general? Yes. It's just one of those battles at the moment. We might have to pick our battle here with dollar yen. Do you expect dollar and pound to get stronger? That's an interesting question. I think you've got to weigh up sort of what's going on. This week could just throw in a complete curveball. I want to say to you, I expect dollar to do this and expect pound to do that. When we had Jackson Hole last year, that was when, there was quite a significant turn in the Fed, and they were talking about, or the Chairman Powell was talking about hiking interest rates quite aggressively. That then kind of sparked sort of an interest rate move. I would be very cautious to say anything until that event. Obviously, I could say to you, you know, this could happen, but you know, it could change by Friday. Come Friday, he could turn around and say, "Yep, because of the slowdown in China, we're going to consider pausing rates." You know, blah blah blah. That could then see the dollar turn. You know, if he says anything about, you know, we're continuing to watch the data come out, and that there could be potential for us to hike rates further or keep rates higher for a longer period of time, then, you know, I think the dollar could remain a little bit stronger. From a cable point of view, pound is still relatively strong across the board. It has took a little bit of a beating today. You got pound Oz here, which I ended up coming out at break even, so that one got took out there. Pound Kiwi's been pretty good. Really like that market. But yeah, pound has took a little bit of a beating today, as well as other currencies. But pound is technically, from a strength and weakness point of view, is technically one of the stronger currencies. Inflation's still really high in the UK. Inflation really high. Bank of England is still going to have to act. So I still think that the BOE have another rate hike in them. That's also can be quite a good influence for the pound at the moment. So do I expect dollar and pound to get stronger? I'd say more pound to get a little bit stronger. Dollar I'm a little bit more unsure of at the moment. Hopefully that makes sense. Obviously I can say that, but, you know, dollar's absolutely rallying at the moment, and you know, could be a pie in the face moment. What else could we look at? So obviously, you know, we were looking at gold. Sorry, let me go back to gold. Gold has also been very fruitful from, you know, strategy point of view. We talked about this move last week on the live stream. That one played out nicely into that $1,900 level, which is just through here. But look, we just had a little deep tap into that 200 moving average, and prices started to reject from there. So I would be, again, very much dependent on how the dollar plays out. If we do get that dollar strength, you know, I mean, gold could end up back at these 1815s. The only thing I'd look at is maybe something involved in here. Let's have a look at the daily chart. Okay, so you can see we kind of had a double bottom pattern there, or maybe even a bit of consolidation, which brings in a high around about 1855. So that would be another sort of point. Sorry, let me bring that down. I wanted to edit this. 1855. That could be a little bit of an area of interest as well for price. So we'll see if we do get any kind of reaction to that level. Whether we do or not, again, is a different question. I like to react when the market reacts, you know. So we'll see if we do get some kind of pullback down into this level. I just don't see where or how gold's going to find some support without some kind of catalyst at the moment, because we're below $1,900, which is this red line in here. We're holding kind of below that level at the minute. So yeah, the next kind of points are down through here. Arguably there's another one maybe within that area, but I wouldn't say that was a strong area. So gold looking a little bit fragile here. A little bit fragile. Come off the 50 moving average there on the 4-hour time frame. Hour is looking very bearish at the moment, but we'll see. We'll see if this reaction from the dollar index holds. You know, if that holds, you know, that could be quite good. You know, sometimes when we get these large impulses, we can see them reverse as well, can't we? So we'll have to just keep our eye on it, see if it does continue to push higher or not. Other markets of interest. So let's go take a look at the stock markets then, because usually, obviously, if the market is in a little bit more of a risk on mode, we do usually see a continuation of the sort of S&P. Now the S&P here has obviously had a few weeks of bearishness. We're coming into sort of the 43, 45 areas here. We've had a bit of a bounce. That to me doesn't look like a really sort of strong move at the moment. Obviously that could change, but this is looking a little bit. We've had a crossover on the 4 hour now. What I like to look for is this weekly chart. You know, the weekly really gives me a lot of fuel for my analysis. I think, you know, I'm looking at the weekly. I can see there's a low just kind of through here. You know, if I was to kind of look left and pick out another point, there's potential for that high to come into play there. So the way I see this is that we've come into support. We've had a little bit of a bounce. It's whether price can drive through the support now. Usually what I like to look at is, well, if I can get a fib on here. I do like to, with the stock markets, have a little bit of a look at where the 50% mark is. So sometimes if price pulls back into the 50% of the week, we can get some kind of action around that level. And you can see price does actually have a little bit of a bounce there. If I can actually make that fib a little bit better. Like so, you can see, yeah, we've had a little bit of a bounce at that 50% mark now. So I would like to see if that does continue. Would I be sort of a trader of this? Probably not. Like I said, I'm already in euro dollar, so I don't really want to jump into another move at this moment in time. But we shall see. We'll see if we get some kind of, you know, continuation to the downside there on the S&P 500. From a setup point of view, we don't have one yet. So, yeah, we're going to have to wait. Let's have a look at the 30-minute. I think if you knew the hourly 200 was there, you could have looked at something, but that would have been quite aggressive on the 30-minute, I feel. Still no technical setup there either. Quick flick over to pound yen. Done all right on pound yen. Had a couple of winning trades, one losing trade through here. I just let this one go too far. It was a double top, and I should have bailed that move, but I didn't. Ended up getting in yesterday, back to the highs there, which was good. Price now starting to pull back. Now, this is again that sort of play between, you know, you got pound potentially being a stronger currency. You know, could the Japanese yen continue to weaken? So pound yen long makes sense. If we get rid of these now, go to the weekly chart. Got some old analysis on here. So let me just, is it control? I'm going to do that. And that. Let's zoom out a little bit. So the areas we're kind of looking for here are the 188, which is there. And potentially the 195. Now that's a very big potential. Do I see 195 happening at this moment? Probably not. But you know, we have to look at it because it's those highs that formed back in July. So we've got to look at that. November 15 highs, I think, you know, is where I'm expecting price to come into. Now, if we're looking at it from a weekly perspective, really strong upward trend here. We've been talking about the support at the 180 spot 50 handle, which is here. Basically following this weekly trend. We had a strong bullish close last week, and all I wanted to do was really follow sort of this weekly trend. Oops, sorry, through there. And you can see if I bring on the averages here as well as the RSI, we've got multiple. Where's that gone now? Here we go. So you kind of got these moves through here. Don't quite tap it on the hourly. Let's kind of tap it on the half an hour chart, just through there. So we've had a couple of decent goes at it. We didn't quite get, I mean, if I was being really sort of picky, I'd be looking at that. It does say 149 spot 55, so there could be something through there as well. But yeah, very similar to dollar yen in a way. The way I like to look at this is we've got obviously resistance up in here. Price has consolidated down through here as well. So if I was to put proper sort of lines on here, I'm eyeing up this consolidation through there. That consolidation is around about 145, 185.50, sorry. Thinking of dollar yen then. 185.50 is the high of that. So if we move that up into there. Prior highs, 186.50, which is where we found a little bit of resistance right now. You know, it's quite often we can see that kind of turnaround. We've had a risk on day yesterday. Yen weakened, pound got stronger. We hit the highs there. We've started to pull back a little bit now. So again, I'm kind of looking at this thinking, well, if we do get a push in yen, is this going to be another opportunity for us? So I am watching this 30-minute time frame. You can see I've got an alert set above the RSI just down through there. So I am looking to see how this reacts. But I do quite like price coming into 185.50, just because that was the sort of prior high where price did break out to the upside. So 185.50 on pound yen is something I do like the look of as well. So yeah. Any other charts that you think of, guys, let me know. I think the other charts at the moment are a little bit stuck. You know, obviously dollar's the mover at the minute, euro dollar as well. You know, cable's coming down. Dollar yen you could argue about. I don't really see it, to be honest. I'd much rather wait to see if that yen does start to weaken. So what I want to see basically is, you know, every other yen pair start to weaken. So like CAD yen, pound yen, Aussie yen, and then we can start looking at the yen as a whole and saying, yeah, is that the risk complex coming in, and you know, are we going to start seeing that risk on sentiment jump through? So, yeah, not really seeing it right now. Euro was moving lower. Bitcoin also dropping lower as well. I know Denise likes this one. I don't know if Denise is on today. Probably not, because she usually does send a message. But Denise, if you're watching it on replay, yeah, we've had a little bit of downside coming into Bitcoin as well. We're now back into sort of that 26K level, which are these previous lows. So, you know, is that to do with any kind of market situation going on at the moment? Is Bitcoin considered a risk asset? And, you know, if we're moving into risk off, is Bitcoin going to feel the effects of that? I'm going to probably leave it there, guys. Sorry. I'm just going to find this report for Vincent. You did ask me about implied volatility. I'm going to send you a little thing that you can have a little look at. Lots of information here. Implied volatility is usually more to do with the stock market rather than and sort of options and things like that, and put calls and stuff. So I will send you this rather than kind of talking through it. It explains it very well. So I'm going to put this in the comment section for you. It's from the CME as well, which is brilliant. So the way I look at sort of volatility is kind of like a seesaw effect. And this was sort of taught to me. You've kind of got a seesaw, just through. Well, I can't really draw a seesaw, can I? That was going to be sort of the barrel of the seesaw. But yeah, you've got sort of, I might say it's high volume, low volatility, high volatility, low volume. So the way I see it is this kind of like seesaw effect. So when you've got high volumes in the market, there's sort of low volatility. We're in a period of high volatility, low volume at the moment. We know that because markets are being exaggerated by these kind of moves that are happening, exaggerated by the news that's in the markets at the moment. And we are in a period of sort of low volume anyway, which is this August period. This is where most traders are away from their desk. If we're kind of looking at it from a holidays point of view, August is usually the point of holidays, isn't it? So we do get that sort of crossover there. This is a good little screenshot for you to take a look at if you are always interested in sort of the seesaw effect. When we do have high volumes and low volatility, the market can be sort of less influenced by those bigger moves or those bigger players coming into the market. And we can often see those sort of range-bound markets, whereas when we get this sort of high volatility, low volume, it can actually be really good for a trader in terms of the sort of less influence to take to sort of push a market. Can also obviously provide us with some good moves. I'm going to call it there, guys. I'm going to go sort of manage my positions, see if my platform's working again, but I'm going to leave it there. Hopefully you enjoyed the web. Thanks for all your comments and questions as usual. Really appreciate it. I will speak to you on Thursday. And if you do have any comments, questions, leave them in below. Vincent, take a look at that link that I sent you. Hopefully that explains everything that you wanted to know. And I will catch you on a Thursday. Cheers, guys.